Just do it! Yesterday, you said tomorrow, so just do it! Make your dreams come true! Nothing is impossible! No, what are you waiting for? Do it! Just do it! Yes, you can!
What's happening guys, welcome back to my YouTube channel, hosted by the one and only, the first goat, the first king. It is Luke, your mentor.
Yes, sir.
So as you can see by the title of this video, we'll be breaking down, or not necessarily breaking down, but forecasting USD JPY for the upcoming week. So sit back and relax and just enjoy this market forecast. So as you can see by the weekly time frame, what had happened is literally at this particular area, which is 154.750, we had a very strong level of resistance. As you can see, the market came to this level, touched it, pushed all the way back down, tried to come up and close above, but again it failed, and this was just a confirmation that this was somewhat of a strong level of resistance. This is a doji, and then from there we had the strong impulsive move down again. Now as you can see, the market closed literally below this area of resistance, and as you can see, we had this retest, potential retest, and for potential push back down. Now this is on the weekly time frame. Looking at the moving averages, as you can see, the moving averages, they are now been shifted towards the downside, and they could potentially now cross over, and as the market is actually pushing, or will actually push towards the downside. So overall on the weekly time frame, I am definitely in a sell. Now looking at the daily time frame, we had this initial strong level of market structure, which is a lower high. As you can see, the market then created a high, a low, and an impulsive break of this level of market structure, which is this higher low, this lower high, forgive me, this lower high, creating this higher high, a higher low, higher high, higher low, higher high. Now again, we have impulsively broke these two recent market structure points, these higher lows, and as you can see, we are now somewhat retesting. We haven't even retested the backside of this level of support. Now will be tested as a resistance. Moving averages, again they crossed, now it's red over blue. Now currently, as you can see, we are literally sitting at this previous level resistance, now testing it as a level of support, and we're just anticipating to see what the market will actually do. Another thing is we currently have this inside bar candlestick. As you can see, the market actually failed to close above or even below this particular candlestick, so we're just anticipating to see what the market will do in this upcoming week. Now looking at the H4 time frame, let's just try to break this down. On the H4 time frame, guys, we again retesting this level of market structure, this lower high, testing it as now a level of support. We had some form of divergence. As you can see, the market is pushing up. The RSI is pushing up while the market is actually pushing down. As you can see, created a higher high and now a potential higher low. So as you can see, the market found some form of a level of support at this area. So we just want to see what the market will do. Moving averages are moving sideways, but let's get in a bit more detail with what the H4 is actually showing us. So guys, before I actually turn or show all of my drawings, I just want to give you some form of disclaimer that it might be a bit overwhelming, but over the next couple of market breakdowns, forecasts, you will definitely get at least understand the gist of what I am saying, or at least understand the intricacies of each and every single drawing that I have put in these particular charts. So looking at the H4 again, we had this impulse correction continuation now created this higher high. I drawn this fib again according to the traditional way of understanding what a Fibonacci is. If it basically crosses your 110 or 120% point, that Fibonacci is considered invalid. But from my experience, I've understood that it's still valid with particular exceptions. Right, and so this fib to me, it's still valid even though it has actually crossed the 120% fib point. Now, as you can see, we had drawn this particular fib right here, and we hit our native 6 to 1.8. we had divergence, right? And so what I was anticipating overall was the market to actually push back down, right? So on the overall H4, I'm in a particular I'm in a sell, but not like a strong sell. I don't know if I'm making sense. We have not really got a particular like a specific a strong bias for the sell, but overall I'm in a sell. Like kind of like even looking at my daily fib, which is basically this bigger fib, right? As you can see, we had created this impulsive move. This is sort of like a correction from overall continuation for a sell. And so on my weekly I'm in a sell, daily I'm in a sell, H4 somewhat in a sell, right? Now on the H1 time frame, we had this impulse right here. On the H4, we had this. On the H1, we had this impulse, this correction, continuation, correction, continuation move. And so on the H1 now, as you can see, I'm in this overall sell, right? Based on even this particular fib right here. So I'm not even too sure if the market will still come back to this area of market structure, this higher low, retest it. I'm not sure if the market might do this, right? Come all this way, retest this particular market structure which has been broken, retest this previous level support as resistance, which will also align with 38.2%, and continue in this bearish trend. I'm not too sure if we'll do that or it will just continue in this bearish trend. So let me just delete that, because now making my charts a bit messy. Right, so on my 30-minute time frame, guys, my 30-minute time frame in this particular like past week, we had some particular trades. As you can see, our divergence is basically the market to push up, and then at this point we had this projection right here, and then on I think it was Friday, we anticipated the market to push back down all the way here. Now, based on this, now what I've seen is that we had divergence, right? We had divergence. We had this trend line break and retest, trend line, this yellow trend line. We had a break and retest. Market gave us a bullish variation candlestick, market push back up, and as you can see, we sort of like in an overall consolidation, right? But when I was looking at the 50-minute time frame, guys, let's go to the 30-minute time frame quickly. When I was looking at the 30-minute time frame, I couldn't help but notice this weak exhaustion, right? Literally the market came to this area, it spiked back up, pushed back down, spiked up, pushed back down, spike up. Right here gave us an engulfing bearish candlestick, and as you can see, the market sort of like also gave us a lot of spikes. Also, this is literally a broken level of support, and as you can see, the market is somewhat now retesting the backside of this level of support, as well as this newly drawn minor trend line, right? So now we're retesting this, and so my bias, or at least what I had anticipated, was actually two things, right? Should the market actually break below and retest the backside of this minor level of support, retested it as resistance, I do anticipate the market to push back down to this particular level right here. Or should it break above this high, come back to retest, give us some form of a bullish variation, you might anticipate a buy. But overall, like, my bias or general bias is for the market to actually continue at least to this low, and worst case scenario, this monthly level of this monthly foundation area. Now again, we had broken this particular lower high, and created a higher high and a potential higher low. We do have some form of a level of support at this particular zone. As you can see, the market spiked, came back down, gave us a spike, pushed back up, gave us a spike again, pushed back up, closed below right here, somewhat retested. Some people actually entered into a sell right here and got faked out. As you can see, the market actually closed above even this moving average and started rallying towards upside, breaking all of these lower highs, low highs, creating higher highs, right? But we haven't actually established a particular and a specific lower high, so the market is still valid to create lower highs, but it cannot break this particular level right here, because if it breaks below this, now it has invalidated our this current PA of a bullish structure. And so what I do anticipate, again, like, anything could possibly happen, right? Again, as traders, we do not predict the market but rather react to it. And as you can see, like, on the overall grand scheme of things, this blue trend line right here, this is a 1 hour trend line, it's still holding. As you can see, every single time price came to this trend line, it pushed back down. Every single time it came to this trend line, it pushed back down. So we do not know, we're not too sure, but there's a particular bias, right, that I have, that the market can particularly respect this minor trend line, push back to this zone, right, and then from there we'll just take it from there. But again, it's a particular bias. The market can still push all the way to this 38.2, the one I showed you on the H1 time frame, can still push all the way to this and then push back down, or it can respect this 23.6%. as you can see, respect it before it actually rallies to this negative 27%, right? And so guys, that's my bias for USD JPY for the upcoming week, that we could potentially just sell down, even for, will be just a couple of pips. Let me just let's see, to be literally 55 pips. I think anything up beyond 30 pips is worth the trade from my experience. So on USD JPY, guys, I am anticipating for a sell. And yeah, so basically, guys, we've reached the end of the video. Do hit that like and subscribe video, and yeah, do enjoy the rest of your day, guys. Peace out.